In this video, I'm going to show you how I use some news from Roku to write a fat covered call and use a cash secure put, potentially making over $1,800 in this short 24-day window. Stick around. I know you're going to like this one.
Let me show you my eyes.
Hey, welcome back, everyone. It is time for another red-hot covered call video. Well, I'll tell you what, the markets are absolutely on fire. Everybody believes we're going to more all-time highs, and I actually believe them. A lot of good things are happening in the market, and right now we had some great employment numbers. These are some great times, and if you're not in the game, right, if you're sitting on the bench watching everybody else have success, I'm really going to encourage you to get your financial education, open up your small ball account, and give it a try. Once you get your financial education, once you get your experience, you can start having the same success as we are. Now look, before I get going, if you like what you're hearing today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing today is we're talking about a Roku trade I just did. Now, I know for a lot of you are waiting for that part 2 of retirement anxiety video where we're going to generate that monthly income using covered calls and cash secure puts. But I have to tell you, the laptop that I created a lot of those files on, well, they're in the trunk of my buddy's car, for which he won't be back for another couple weeks. So we will get that part 2 out to you shortly. And that's the reason I didn't do a video last week, because I was in the middle of doing that video. We are always doing videos here trying to up your game. That's the key here. This is an action channel. If you're not doing it, then what are we here for, right? I mean, I want you off the bench and in the game. So look, I'm going to show you a trade today. We're going to talk about it, and I'm going to ask you to let me know in the comments below if you would have done this trade based on the news that Roku got just last week. So let's go ahead and get to that. And by the way, the newsletter is done. I'm going to be sending that out probably tomorrow. So go to my website, ctpdashboard.com. You want to sign up for the newsletter. I have an exclusive video in that newsletter for all those that sign up. Now let's talk about Roku. As you can see, Roku last week, man, got some very bad news. Now, first of all, if you don't know what Roku does, most people don't. Most people think they're a streaming hardware device maker. Here's the deal. They license their software. So a lot of those TV sets that you see out there that don't have the smart apps, well, Roku will license their software and hardware for those TV makers. So what you're finding Roku doing is not just a piece of hardware. They're actually licensing software that goes into these smart TVs. So they have found themselves in a sweet spot where they're just not a hardware maker, and their margins will get crushed when another hardware maker comes out and creates a similar device. They are actually getting their software in these smart TVs. I tell you, this could be the beginning of something big. Now, with that said, I'm not worried about where Roku goes in 2020. I'm worried about Roku right here, right now, for this 24-day trade, because this is what I did. Last week when Roku was rallying above 160, Morgan Stanley came out and said, look, pump the brakes. Roku is overpriced here. So the stock fell some 23%, and look at that, man. You could have got Roku at 135. Now, I didn't buy Roku at 135, and in fact, I'm on record as saying I really don't believe in the Roku business model of selling hardware. But then I did some research, and this is the key. This is what I want you to take away from this video today. What I did was somebody told me about their licensing of the software. So I didn't know what Roku did. So when I saw this 23% sell-off, I decided I need to act right now. I need to get my education on Roku if I'm going to use this as a buying opportunity. So that's what I did. I went to Yahoo Finance, man. I read all the articles. I tried to find all of their revenue numbers and all of their profits, things like that. That's what I did. I did my research. Then I decided, look, this is going to be something I want to play, because the very next day, Roku is rallying some 5%. Now, Roku got some great news from another brokerage the next day. They're saying Roku's only at the beginning of the cycle. So this is a great buying opportunity. So with my research in hand, and with where the stock has bounced off of that 23% loss the day before, I'm feeling more confident. Now, what I'm going to do here is a 24-day trade. So the way I see it is, we don't have earnings until February. Chances are I'm not going to hold the stock till till February. They don't have a dividend, and really they don't have any news. We're in this sort of quiet period where Roku's going to move with the rest of the market. And here we are with a market moving sideways to higher. I think that turns out to be a great buying opportunity. And even with the stock up some $8, I decided to buy Roku. And that's what I did. But what I want to show you is the visual on this chart, okay? The chart tells a story. Look at how Roku rallied into November, right? The idea is everybody's going to buy their product for Christmas, and then it gets slammed. The very next day, a brokerage comes out and defends the stock, and people are buying it again. It rallies some 8 points to 143x. And this is where I'm going to make my move. And this is where I'm making a decision on Roku based on all my research. So if I'm going to buy Roku here, a stock that really hasn't been on my radar, I better know what I'm doing. And that's what I did. At 143.25, I decided to buy 100 shares. Now, I already had a cover call dialed up, and I'm going to show you what that trade was, but I already had a plan in place. It's about having a plan, executing the plan. I don't willy-nilly buy this stock at 143.25 and then figure, well, I'll come up with a plan later. No, I'm going to have a plan right here, right now. I don't buy Roku unless I'm going to sell premium. Some people have asked me about my NVIDIA trades where I bought NVIDIA at 154 and it's rallied over to 210 now, and do I feel regret? No, I have a plan. I execute the plan, and when it works out to be a max profit, I'm happy. And in the case of NVIDIA, the 2 times that I bought NVIDIA recently, it's worked out for me perfectly. Hey, look, I'm a max profit guy, man. Give me that crumb. We move on. See, I'm in the moment right now with Roku. I don't care where Roku's going to be in the next 6 months. I need to focus on these next 24 days. So this is what I did. So let me set up this trade for you. Not only did I buy 100 shares of Roku and write a covered call, I actually felt so comfortable that Roku's probably going to trade sideways to higher. I sold a cash secure put as well. This is what I did. When I bought the shares at 143x, I dialed up that 150 24-day trade, and I got paid $6 for that. They gave me $6 per share to give somebody the right, but not the obligation, to take my Roku shares that I bought for 143x for 150. Man, that alone right there, if my shares are taken away on December 27th, that's over an 8% 24-day trade. Now look, you have to understand, Roku will move like Alibaba, like NVIDIA, in 20-point clips. So you have to understand what you're investing in when you buy these high volatility stocks. I have no problems using Roku, and that's what I did. Now I'm thinking to myself, man, maybe I want another 100 shares. Man, I really want to run with this thing if it's going to go higher. Well, this is what I did. I'm looking at the charts, right? And you could see, here's my Bollinger Band. Well, when Roku fell down to the bottom part of the Bollinger Band and we got that bounce, I'm thinking that'd be a great spot for a cash secure put because there's support there. See that support line right there? It goes all the way back to October. Wall Street sold it off to support, and then they rallied it higher. I think that 140 number is support. So what do? I love writing that cash secure put about $5 to $10 under support. Gives me a little bit of cushion there if the trade goes against me. I ended up doing a 135 cash secure put. They paid me $5.60 per share. That's the same expiration, 24 days. I call this my splitting the difference cash printing machine trade. I want you to think about this for a second. If Roku rallies above 150, I get 150 plus $6 or $156 total. That's 8% right there. Well, as the stock moves away from this 135 strike price, this option that I got paid $5.60 for will decrease and it'll expire worthless. I not only make the 156 on my shares, I make that $5.60 on that cash secured put. Now, if the markets peel off, and Roku will too, this thing's gonna fall. Now, because I gave myself about a $10 cushion, I got about $10 to play here. Remember, I bought Roku at 143. That's my number, right? That's my number, 143x. I have that $8 of downside cushion for the 135 cash secure put. So what'll happen there is this: as the stock's falling and the likelihood of it not getting to 150, the $6 option is gonna decrease in value. It's gonna expire worthless. I end up keeping that $6. I end up keeping my shares, and if the stock were to stay above 135x, I'll keep the $5.60. Think about that for a second. I got $6 for the cover call that expired worthless. I got $5.60 for the cash secure put that expires worthless. That's over $11 in premium I got paid, which technically reduces my cost basis. So think about that. that? I don't own Roku at 143 anymore. I own it at 132. And the stock's trading above 135. Man, this is an opportunity to write another covered call. But look, I do this trade with confidence. I do this trade because I've had experience doing this kind of trade. But the most important thing is this. Roku hit my radar when it fell some 23%. Instead of just going out and buying the stock, I did my research. I really looked into what the business model was. Why did Roku go from some $40 a couple years ago to over $175 recently? So I did that research and found out what their true business was. So I'm educating myself. This is the key thing, man. We need to educate, we need to take accountability, and then we can profit from it. Now, real quick, I'll show you what the numbers look. On the covered call side, I bought Roku at 143X. I wrote that covered call. That's over $14,000 invested for 100 shares. I end up making, if my shares are taken away, some $1,275. That's what I'm hoping to do. I'm hoping Roku goes above 150, have my shares taken away. Man, that's another crumb in the wallet. Now, with the cash secure put, I had to put up over $13,000, right? It's a 135 cash secure put. So I had to put up $13,500, sell the cash secure put. They paid me $560. If they do not assign me the shares, my profit there is only $560 on over $13,000 invested, which doesn't sound like a lot. But remember, I love using the cash secure on those down days where I can use support. I call it my cherry picking cash secure put profit. I don't really look at it from a percentage stamp. Now, on that covered call side, of course I do. I want to generate 3 to 4%. In the case of Roku, this is off the charts. The implied volatility for this stock to rocket higher is there. But for me, all I care about is that Roku gets to 150 in the next 24 days. Man, that'll be another crumb for 2019. Now, hey, look, I'm going to leave it right there. I love doing these combo trades because I make money either way. Now, with that said, do I want Roku to fall below 135 and be assigned the shares? I really don't. What I want to happen is Roku to go above 150. I have my shares taken away. I keep the premium. I keep the premium of the cash secure put. For me, that's the most optimal play here. Let them take my shares. We move on. And of course, if Roku were to fall below 135, I have that 11-point cushion in premium I received. I'll reboot my strategy with the new cost basis for my share. I'll have 200 shares working. That ought to make for a couple good trades. Now look, before I let you go, the upgraded CTP dashboard is now available. A lot of people have been asking me, want to show you the link here. ctpdashboard.com/join. I give you all this great stuff. Look, I'm not going to club you over the head and try to sell you stuff. You either want to be a part of it or you don't. But look, what I try to do is up your game. And with the upgraded CTP dashboard, man, it is the free CTP dashboard on steroids. And not only do you get one dashboard, you get 4 and all the other stuff that comes with it. The THRU video chart breakdown, man, my real-time trades, my chart of the week, and that special Ask John access. Now, one thing I want you to do for 2020 is I want you to set a goal, okay? Somebody asked me just the other day, how do you stay so active in the market? How do you stay passionate with it? I always set little goals. And when you set goals, you'll look to achieve those goals. So what I want you to do for 2020 is get a piece of paper out. I want you to put down some goals for yourself. Financial goals, family goals, work goals. Put them on paper and try to achieve them. Put them on a Google Calendar and revisit them. That's what I do. That's why I have a goal of making $55,000 using the selling premium strategy. Last year was $50,000, and I'll tell you this, every day I thought about that goal, looking to achieve it. That's what I want you to do, because I think if you set goals and you stick with it, you too will have the same success that I'm having. Hey, look, if you like this video today, bang that like button, and until next time, may all your covered calls be profitable.